This is the Wall Street update of World Business Report on Wednesday, the 20th of January. I'm Lucy Burton. Screens on trading floors across the world showed seas of red arrows as investors sold their shares, concerned about growth, China and low oil prices. The drama began today in Japan, where stocks plunged into a bear market. That's where prices fall by 20% or more from a recent high. Yoke Ishikura is an emeritus professor at Hitsushibasi University in Tokyo.
We had a big sell-off today in the Japanese market, and that was because of the stronger yen, the ever-declining oil prices, and the uncertainties in the Chinese market. The investors who are very much worried about the uncertainties throughout the world and the uncertainties about the Chinese economy and so forth were looking for the place safe haven, so to speak, and they came to get the yen. And that pushed the yen to the much stronger position, which will in turn hurt the Japanese companies.
Almost 3,000 kilometres across the East China Sea, and the picture in Hong Kong was no better. Stocks there tumbled to a 3.5-year low. Investors are worried about the weak Hong Kong dollar, lack of economic stimulus from China and capital flight. Here's the BBC's Juliana Liu with more.
It's really been carnage. People are confused. People are unsure about tomorrow. And what's interesting about what happened today is that, the China markets in Shanghai and Shenzhen did much better. So this is something that we're seeing in Hong Kong. And what's chiefly driving the falls in the stock market here is the really rapid fall in the value of the Hong Kong dollar. Now, the Hong Kong dollar is pegged to the US dollar. It's been pegged for decades for stability reasons, but it does trade within a fairly narrow band. And what we saw in the space of just a few hours is huge moves within that band. The falls that we saw today were really, really huge. And one veteran trader says he's never seen anything like it. And the depreciation of the Hong Kong dollar is being interpreted as a sign that huge amounts of cash and investment may be fleeing the city. Of course, we don't know exactly how big, but that's certainly how traders and investors are treating what they see. And that's the reason why the stock market has plummeted.
Oil was primarily blamed for a rout in Russia. The ruble hit an all-time low against the dollar. It's weaker today than it was at the height of the fighting in Ukraine and the subsequent international sanctions at the tail end of 2014. However, Andrei Kostin, the president and chairman of the Russian bank VTB, remains cautiously optimistic.
I'm slightly less optimistic in January than I was in December, of course, with all the bad news coming from the markets about oil prices, about stocks, about Chinese economy. So we are reviewing many things now in our forecast for this year. But for me, I still believe that the economic problems in Russia are manageable. And crisis for me, that's when things are unmanageable. So the situation might get worse. And of course, basically over oil prices, we have to view as a new price level of about $30 maybe dollars per barrel or slightly more on average for this year, but not 50 as the Russian budget was counting for. I can remember that in 2003, 2004, the prices were at this level, but the economy was developing quite successfully. So we have to think about other things like changing the nature of our economy, trying to bring investments, creating better climate, though I understand it's quite difficult under the circumstances. There's a difficult time ahead, but I think they'll be manageable.
Well, where the East led, the West followed. European markets fell throughout the day as well. Britain's biggest companies saw tens of billions of pounds wiped off their value as the FTSE too entered a bear market. It was an equally grim day for the French and German indices as well. Justin Urquhart-Stewart from Seven Investment Management reflects on the day in Europe.
Well, what we saw was a similar sort of picture going on over here, where they actually saw not just in London about 3.5% going down, but of course also in Germany we saw the DAX at just under 3%, but some of the more specialised indices, the technical and smaller companies one, over 3% falls in there as well, and we saw the same also in Paris. So frankly, across all the main European markets, a similar issue was there, as markets were just obviously reacting to the oil price, reacting to what they saw in the Far East, but also trying to understand what actually is the underlying cause to all of this. Where is the issue which is actually going to find where we find the problem? Is there some company, maybe a large commodity company, which is actually going to find itself overstretched and maybe cause some problems? Or is it an entire sector maybe? And that's what's putting nerves through the markets now.
Have you got any idea what it might be?
Well, I'm concerned about one or two of the major commodity companies which have built up a lot of debt and now find themselves where their values have gone down, and that will trigger some of their borrowing requirements and things like that and cause some severe problems indeed. It's almost as though you expect to find some sort of capitulation, a sort of financial incendiary to go off so that people will say, now I can see what's happened. Then if I've still got confidence that the global economy isn't actually falling apart, it's still growing, which all the indicators are telling us that it is, then you'll find the buyers coming back in. But they need to actually find the reason first to be able to say, I will now commit more money.
And were you surprised to see the FTSE 100 joining Japan in the bear pit?
I'm not really very surprised because the FTSE 100, remember, isn't much of a UK market. It's much more of a global index when you think about it in terms of all its oil companies and mining companies and things like that. So it was joining in the overall area. And I think some of those companies could be the ones that maybe are causing some of the strain here overall. The pain that these companies are suffering, not just in commodity prices, but also the strength of the dollar, which affects those commodity prices, but also the countries they operate in, the emerging economies, which have also been suffering greatly. And these companies are in the thick of it, and maybe that's the issue here.
Finally, we turn to Wall Street, where stocks tumbled during the day. At one point, the Dow was down 3%. There was some relief by the end of the day, though, as Scott Nations from Nation Shares in Chicago explains.
During the middle of our day, it was a really, really tough day. Stocks bounced back impressively, gained back about 90% of their loss, at least 90% in the S&P at one point. S&P is going to finish the day down just over 1%, which all in all we would have to consider a victory. But given the horrible price action in crude oil and West Texas Intermediate crude oil today, I think that we have to say the S&P down just over 1% is actually a real victory, because our stock market has been watching crude oil and what it says about economic growth here in the United States and in Asia. And we've been following crude oil, and crude oil had just an absolutely horrible day.
Someone we spoke to earlier described Wall Street today as a bloodbath. So how come we then see this recovery? What triggers that?
Well, I would disagree with that. It was certainly a tough day, but I don't think it was ever a bloodbath. If you look at any of the volatility indexes, whether it was the VIX or the Voldex, while they were up quite a bit during the course of the day, we never saw a giant spike. And so, for the most part, the sell-off was orderly. We saw buyers of options and buyers of volatility, as expressed by the VIX and Voldex. And so those climbed quite a bit. But again, we never saw panic in any of those option markets. And so I would say that it wasn't a bloodbath. It was certainly unpleasant at the bottom. But that is what set the stage for the bounce that we saw in the afternoon.
And you've already touched on oil. Lots of people suggesting that the fall in Brent crude is behind the slips today. Would you agree with that?
Absolutely, undeniably. Here in the United States, West Texas Intermediate crude oil for February delivery was down nearly 6%. And again, that expresses the market's point of view about growth here in the United States and in Asia. And no matter what crude oil market you were looking at, whatever it had to say about growth was bad news.
Well, that was Scott Nations talking to me just before we came on air. Well, let's have a look at some of those figures, because on Wall Street, the Dow was down 1.6% at 15,766. And at the end of the day in London, the 100 share index was down 3.5% at 56.73. Gold is trading at $1,101 an ounce.
Thank you for downloading from the BBC World Service. You can find a whole world of information from science, arts, business and technology. Just go to bbcworldservice.com/podcasts.